Okay, hi guys. Today we have a new topic, which is SECR. So the very first obvious question is, what is it?
Yeah, so SECR stands for Streamlined Energy and Carbon Reporting. And effectively, it's a bit of legislation put out by Ofgem to ensure that businesses of a certain size are reporting their carbon footprint and their carbon strategy in their financial accounts.
Okay, and who has to do it?
So this is really targeted at larger businesses. So there used to be some legislation before it called CRC, which was the Carbon Reduction Commitment, which was for a small percentage of large energy users. What the SECR is an expansion on that. So it's streamlining that process and making it more applicable to a larger amount of companies. So those companies that fall into the bracket, they have to have a turnover of over £36 million a year. A balance sheet in excess of £18 million and over 250 full-time employees. Now, to actually qualify, you have to hit at least two of those thresholds to be able to qualify. If you hit just one, then you're exempt from reporting.
Mm-hmm. Yes. So who notifies the companies about?
Okay, so
the
Environment Agency have they'll send out letters to companies that qualify, but you can't just rely on getting those letters. The companies of this size, they may have multiple offices. It might be that the registered office doesn't have anyone that actually deals with this sort of thing there. The onus really is on the company itself to be fully aware of what their legal obligations are. Now, the thing is, most of these companies at this size, when you're doing your annual accounts, you'll be using an auditor. Quite a lot will use some of the bigger companies like PwC or Deloitte, and they will probably bring that up to them during audit. The only thing I would say is that do you really want to be dealing with this when you're in the middle of a financial audit and then having to do this on top of all the hard work that goes through your annual audit? Or do you want to have this done ready to present to the auditors just to be able to move on and carry on with the rest of the audit? And we have found from our clients that the latter is very much preferable.
So what should a client do? Do clients do it themselves, or is it an energy broker who does it?
To be completely honest, it's a mixture. So some end users do it themselves. The majority, as far as I'm aware, do use a consultant like us, mainly because we house a lot of the data already. So the data collection exercise needed to be able to provide produce this report is already done. It also helps to have a third party's view on that data and provide a narrative and a strategy in a cohesive approach with the end user to produce effectively a report that's actually worth what it's written and to give it context.
And how long does it take to actually have it done? Is it a long process to finish this report?
So I'd say, like with all of these reports, the goal for SECR is to, number one, accurately carbon footprint the business that covers all the scope of emissions that are in the SECR legislation. And number two, provide a measurement index. And number three would be to provide commentary about how we're going to go forward as a business to reduce our carbon footprint. So the longest time in this, it would be actually gathering all the data and all the information required to accurately footprint that business. So with gas and electricity for buildings, for example, if you're using a consultant like us, you would have all of that already in a central repository online. So that's half the battle done. But it's the other nuances that are a bit difficult, like the travel. So when we say travel, we say direct fleet, we say grey fleet. And what that means is direct fleet. Do you have any company vans, company vehicles that are driving around specifically hired by the business or owned by the business, and grey fleet, how many of your employees are driving around and claiming mileage off the business. All of that has to be taken into account. And the devil really is in the details. So it's not just a case of how many miles. Okay, great. What car did that miles? What was the engine type? What was the literage? What fuel does it have? All of that has to be collected and with the appropriate conversion factors applied to it to be able to produce a accurate carbon footprint.
Okay, and what's the big purpose behind this whole report?
Yes. So the report is to the whole reason for the report is to effectively get businesses to be paying attention to their carbon output, and as the world changes and as business progresses, there's an ever more drive towards net zero. You hear it from world leaders, you also hear it from big corporations, all about net zero. Now, quite often when you're competitively bidding for business, quite often in the information that they're asking for you when you're trying to sell your products is what green credentials do you have, how sustainable is your business. So this is now getting to a point where it can actually affect the income of these companies. So the idea is they're publishing that information so that it's there in a public record. It will be viewable in your accounts. So by doing that, that's leaving it out there exposed to be reviewed for better or for worse. And if that information's out there, the companies are more likely going to pay more attention to it and understand that, no, it's important that our carbon report is good and that we're showing to be doing the right things, because that will affect their chances of winning business.
Yeah, absolutely. Okay. And very important question, what's the deadline of this report?
So unlike other legislations like ESOS, where there's a clear defined deadline for everyone, this one is all to do with the accounts. So you just have to make sure that you are including the SECR section and report within your financial accounts. So the deadline is actually whenever you need to file your accounts at Companies House. That's your deadline.
Okay. Well, is there anything else you find important mentioning that people need to know of?
Yes, I think that what's the most important thing to understand about SECR is that albeit a legislation that is a requirement on businesses, don't fall into the trap of seeing it as too much of a fully pressured audit. I think that the reason for this legislation is to make sure that companies are conscientious, and as long as you're open with the Environment Agency, you're open and you're with the partners that you're working with, and that you're seen to be doing this with the best intentions of accuracy, of punctuality, then I believe that that's really what the legislation is designed to do. So it's important to be accurate because it is public record information, and it's important to be punctual and ensure that it's there, so you're not showing the rest of the world that you're not paying attention to this stuff. But also at the same time, it's fine to slow down, take your time, get it right, engage partners and experts who have carbon footprinted businesses before, because with all things carbon legislation, it is still all relatively new and people are learning as they go. And the good thing is the more you do it, the better you get at it, and the more context each report will have on it.
What consequence is there if companies don't do it?
So with ESOS, for example, if you don't do that, there's quite clearly a £50,000 fine and other penalties that go with it. It's not clearly defined in the legislation, but it's heavily intimated that there would be recompense of a financial nature. However, to date, there hasn't been any that I'm aware of. I think the biggest penalty that you really want to be thinking about is having it on public record that you're not actually complying to carbon legislation. I don't think that would be a good look when competitively bidding for business. Yeah.
Okay. Well, thank you for the main information that we all need to know about SECR, and you guys get in touch with us to know more.
Brilliant. Thank you very much.
Yeah. Thank you.
Bye-bye.